All right, we're back. It's been a while. I don't even know if I know how to do this anymore, but we'll try and make it quick per usual. I'm sure it won't be, but just wanted to go over current positions, kind of current thought process on the market, and some new positions, kind of new strategies, and just kind of cover how things have been since, I guess it was maybe 10 days ago, which obviously we were still experiencing quite a bit of volatility. So, if you don't know who I am, Ben Collins, I'm CFA charter holder, CIO, and founder of Options Autopilot, which is a automated options trading platform. So, a lot of the stuff that I'm going to talk about is stuff that I'm just automating. I work a full-time job and ultimately just wanted to be able to have things go on consistently. So if you want to check that out, that's down below. We're currently available on TastyTrade and Schwab at the moment, working on some others. So keep an eye out for that. Definitely subscribe. So, also, hit over 100 subscribers. Awesome. Thank you. Really appreciate it. It's been a fun journey so far, or not always fun, but just trying to be transparent and show, how the journey goes just in general, and how I'm kind of approaching things. So let's kind of just hop into, where we're currently at. Obviously, the past few days have been positive. I think Friday was, but yeah, definitely have seen kind of back-to-back gains in the market in general. We pull up a kind of do SPY as an example here. I guess down a little bit yesterday, sold off, but we've kind of seen a little bit of a rebound and then rally, then gap up, sell off a little bit, but obviously still finished up. And now we're kind of right back in this area, which is interesting to see what's going to happen here. So obviously we kind of probed down below here and finished up, and almost broke again. Came down and the big announcement came out. So let's see, that's all happened, I guess, since I probably posted last. I think I talked about how I basically caught that rally but almost didn't. So we're kind of coming right back into resistance here because we hit that, obviously sold off. We've just kind of been chopping around. As we kind of talked about, though, the VIX has mean reverted or started to. This just happens as things settle down. Volatility does have to mean revert over time. So that is one of the reasons being an option seller in this type of environment is helpful, but you still have to manage your risk, as we've definitely seen and learned, and things can kind of change their correlations different than they were before. So I just want to go over kind of where we're currently at. Actually had a few positions closed today. Let's go into the activity here. So, oops. So this MES, this was just when I was basically doing the short puts. It only ended up putting on 3 of the put spreads, put credit spreads, because I was kind of doing that or wanting to do that consistently while volatility was elevated. Then I kind of switched it a little bit. So it only put on 3. We only have 1 remaining. It closed the other 2 actually today. So closed this one. This actual had gone on yesterday, I believe, but had not received a fill, and then today it ended up getting filled. So I try not to mess with it. It ultimately ends up filling usually after a bit, eventually. It's just kind of annoying when it hits profit target and then the market kind of moves away. And like I said, MES has been kind of illiquid, so that's been a little more difficult. Had an ES 111 close as well. So again, we were only in that for about 10 days. You can see that this is when it went on originally. So 16th, $31.25 credit. Ended up closing at $12.50. And that came off. Bitcoin, as we can see here, Bitcoin ETF, that is, obviously it's going to be correlated and related to the actual currency itself, but we can kind of see we've definitely seen a rally, right? We've definitely seen a rally in Bitcoin. As you can see, depending on what you're looking at. It's definitely broken this downtrend. Again, I'd say it's arguably still below resistance. So I'll be curious to see what happens here. I would say if it breaks back above this level, the most likely scenario is that we're going to go back to new highs. If you're kind of following technical analysis, obviously we don't really have fundamental earnings or anything like that to go off of with cryptocurrency, but could turn over here, could maybe come back, and then ultimately break up. But we'll see what happens. Obviously, we're selling put credit spreads. As we can see, we had some of those. So this one was an open because mine was scheduled to run on Thursday, Friday, but it also closed a couple. So this one closed yesterday. This one closed the day before that. So they've been rolling off automatically, which is nice. We kind of have stuck with it, which at times can be difficult. So that's kind of the current update on the positions. Got a new one in RIVN. So I kind of talked about this previously. So far, we'll see what happens with the stock from a fundamental basis. Technically, I think it's broken this downtrend. You can kind of see a bunch of these wicks all over the place, right? And most of them are kind of selling it off, which is not necessarily positive. But I think we've kind of built a little bit of a base. I'm not going to add. I was originally maybe going to add if we had a convincing close above $12. I don't think that's convincing at all. Realistically, I think that we probably need to get above $12.50. If we get above $12.50, I will add to this position. Currently, I have very long dated leaps calls, so you can see it's already in the money, but that's because I was pretty much at the money. I will add to this position once it breaks over $12.50. It closes. Depending on how strong the move is, maybe I'll add before the close, but it just depends on what the market kind of does. But typically you want to wait for a close above a certain level, because otherwise it could just get faded, and it's not necessarily considered a kind of confirmation of that move from a technical perspective. So that's kind of the newest position. I gave my reasoning before. I think that the company makes very good vehicles. From a fundamental perspective, I still need to fully dig into it. It also feels like it's really gotten punished. And I mean, if we even got anything close to back to where it IPO'd, you could probably retire, but definitely can't bank on that happening. So right now, kind of short term, just kind of a long term play. I do think a lot of the cars they're coming out with are going to be popular and or good. The R2, and then there's some type of hatchback version that they have coming out in the next couple of years. So I think that their pipeline looks pretty good. I think it'll be appealing, and then anyone who doesn't want to feel conflicted buying a Tesla with Elon Musk or anything like that, I think will definitely consider a RIVN. They're definitely not cheap, but I don't think anyone who's considering these vehicles is necessarily super concerned about that. But the R2 is pretty cool little SUV. It's kind of it's not a mid-size. I think it's a pretty much full-size SUV, but it's not huge. So I think it'll be a good in-between, because their R1S is very large. I don't think that that's what everyone's looking for, and not everyone's looking to spend $100,000 on an SUV. So that's kind of my reasoning there. I just think the news stream hopefully is going to be more positive for the company, which will push it up. And things will start to improve. They also are fairly well insulated from tariff or issues with that. They're not in the top 10, it didn't look like, in terms of built in the United States, but I think they might be top 25. A lot of the components are. I think it's for sure over 75%, but I can't say that for certain. If anyone knows, feel free to put in the comments below. But that's kind of a longer term position, so I kind of want to see how that goes. Got a lot of time. As you can see, it's basically a risk reversal that I'm expressing that position as via options instead of the stock. I could just buy the stock, ultimately I would be fine getting assigned if it did end up going below $10. But that's a new position that I put on, and that's kind of my plan in terms of adding to it. Eventually, I'd like to be able to have this just happen automatically on Options Autopilot, but we're not focused on that at the moment. More on selling strategies. So that's kind of down the road. So SOFI also picking up, I would say, finally. But we'll see if it continues. I mean, if some of this stuff kind of calms down, again, arguably it's broken this downtrend. I wouldn't say it's super convincing necessarily, but definitely a positive maybe signal that it could start to move upward again. If rates have softened, so if rates kind of keep softening and it's kind of a better lending environment, better kind of time for mortgages or refinances and stuff like that, there's probably going to be a lot of benefit for SOFI. They definitely seem to be, I don't know, both loved and hated. It's just interesting that they seem to have a pretty good strategy for the business, but they're not necessarily monetizing that from a results perspective, and the market doesn't seem to necessarily care. Intel, just go over that quick. That they just came out with earnings, were not necessarily that great. As you can see, finished at $21.49, currently after hours down to $20.35 basically. So something that the market didn't necessarily like. I need to listen to what the CEO said. Again, I still think that if he's actually going to be legitimate and make some moves for the company, it should be kind of more positive news flow. Hopefully positive developments. You just never know how long that's going to take or how expensive it's going to be. I think he has a decent track record of being able to do these types of things, so I'm hopeful, but like I said, I'm not going to add to this position until it becomes profitable. So I got a ways to go on this. In general, I closed down the short puts, so I'm going to wait until things settle out a little bit. Maybe I'll add short puts back on, but I'm not going to add to long calls at all until we basically become profitable. So definitely got a ways to go there. Gold, actually did a new position on gold. I did a butterfly, and I'll tell you why. So unfortunately, I was talking about this a little bit. I'm kind of missed out on this rip up here just because I was kind of hitting an allocation limit on the automation, so it was preventing me, as it should have, from doing one. But I've never been a gold bug. I understand the diversification. I think it's up about 30% this year. Not to say that it can't keep going depending on if there's demand for it, but again, there's no fundamental, there's a supply and demand kind of issue in terms of gold, but it's not like it produces dividends or anything like that. So it's not like you can say, okay, yeah, it's going to have this amount of earnings or whatever. It's not always been a flight to safety as well. It's kind of seemingly been more of an inflation play. So, but when things got too crazy, then it will kind of sell off. So it's been interesting. When it pulled back yesterday, I put on this butterfly, and the butterfly is basically going to be like this. I wish I could visually show it on this graph, but my thought is this trend is kind of up. Let's do GLD. It's probably going to be easier long term to see it. So this trend is up, and it's basically coming, this kind of diagonal support line is coming in around 3,000. So my thought was, okay, if we were going to pull back, it could maybe pull back to the 3,000 level. I'm not saying that's going to happen. I basically did it for credit. So I don't have risk to the upside, I have risk to the downside. So it's an unequal kind of butterfly from that perspective. So you can kind of see I'm short my two puts here. So obviously we would get max profit if it finishes right at 30.20. Obviously that's not going to happen, but if it pulls back kind of into this area, the butterfly will kind of expand and become more of a tent kind of shape. So that's kind of my play. I didn't want to do straight up put spread again. I thought it was a little bit too directional. The nice thing about the butterflies is you can kind of make them either neutral or directional, and we can do that on autopilot as well. This is what I currently have set up here. So you can already see that we're at a 27% profit. Nothing crazy, but I have it set to take profit at 70%, I believe. So that's working and working out totally fine. So I think I got like a ultimate credit of like $500. So it was on a 60-day butterfly. It wasn't that bad. It was like 12% for the position. So it ends up being 5 to 6% per month, which is very good. Obviously, we're not going to fully realize all that, but that's kind of the thought process there. Again, this is still incorrect. We need to add in and correct some, but in general, let's go over the P&L in a second. I just want to go back over bonds and crude oil just real quick because those are the other ones we have on. So you obviously saw this huge pullback in bonds. Now they've kind of been calming down a little bit. I'm not necessarily convinced that they won't continue to fall, but I'm hoping that they'll just kind of trend sideways. We do have a 111 on that is working currently, and we're just going to let that go, and obviously it'll close when it hits a profit target. Crude oil, but if you recall, both on bonds and crude oil, we kind of got hammered by that market sell-off for the unnecessary approach of Trump's tariffs, but basically got hurt here and then just did another 111, and now obviously it's kind of rebounding. I think, as I've mentioned previously, one of the reasons I'm doing the 111s and it's technically more of a bullish position is I think usually a lot of the shocks are to the upside in terms of if there's geopolitical issues. Obviously, if we go into a recession or something like that, the demand is going to come out. But I think that the market is kind of priced in some of these scenarios. So I think that, and we're going into the summer season, driving season, stuff like that. I think that kind of fundamentally lends itself to some support for the kind of crude oil market. But we'll see. We're going to let that go. They're doing decently, I guess. Bonds at 50% profit. Then we've got crude oils at 25%, basically. So that's kind of the little brief update there. And pretty much, what else did I want to cover here? I don't want to belabor it if I don't need to. Oh, XRP. I mean, we could look at it. I had closed that previously. It was more of a liquidity play just in case other people were going to sell things. I didn't want to be, left holding the bag fully. So it's definitely recovered some. Maybe I'll add a position back on there. That was going to be more of a kind of a long-term, just buy and hold. And I'll probably add that back on at some point here in the future. But I think that, the market's kind of settling down. I think it's a good environment. You can still, pick up some decent premium for selling volatility, and hopefully things aren't going to be moving around as much. It's still technically elevated, and anything kind of above, I'd say 23 to 25 is still elevated in terms of averages, but you can see that it should probably pull back. And the thing about volatility we can see just by this line is obviously it has spikes up, which causes some damage, but then there can be significant periods of time where it is below this level. And that's usually when the market is trending, right? So when VIX hits very low levels, it usually means, there's not much uncertainty in the market, which can be good and bad, but you can just see there can be extended periods of time. Obviously, these were during kind of bull runs and uptrends. It can kind of stay very, very low. So obviously, this is during 2022. You can see it kind of fluctuated back and forth. We maybe will be in an environment like this. I think outside of this kind of craziness, even if we're in an elevated volatility environment similar to 2022, because I still think there's possibility that it's kind of like that, but probably not as severe. But it's anyone's guess. I think that would be okay, even if we're kind of fluctuating back and forth, as long as we're not getting crazy spikes. But remember, if we do, just you got to position size correctly and manage your risk correctly. Don't get too over leveraged to one asset class. That's kind of why I limited my ES to one position at a time. At this point, slow and steady. Oh yeah, I was gonna go over the actual P&L currently. Here's all the stuff that went off today. This is all automatic, and let's go to the year to date. So obviously we've definitely recovered year to date quite a bit. We're still down, which is annoying. From a P&L perspective, again, we're down only because of my manual trades. The automated trades are actually positive for the year, which is the whole point of the automation. That's why I kind of want to get this corrected in terms of showing the correct P&L, because I definitely think we're up probably a couple $1,000s. So in grand scheme of things, compared to the market percentage wise, I think we're definitely outperforming there. After fees, it's obviously pretty annoying. Same story, almost exactly extra $1,000 in fees. Again, I don't think that we're gonna have to be as active as we were, so I don't think we need to do anything there. I might end up changing, because crude oil and because gold are fairly fee heavy. I might look into doing something with GLD and TLT and kind of seeing what the comparison is, right? Obviously, we're benefiting from the margin and the tax benefits. That's why we're using futures. So it probably won't make sense, but just something to keep in mind for anyone that's considering this, or even if you want to still get these exposures to stuff like I'm doing. Again, don't follow anything that I'm doing. This is all educational purposes, but having exposure to different asset classes is good, and you can do it with the ETFs if you don't want to do it with futures or you're not approved for futures. But you can see we're still obviously down in general from SOFI, down from XRP, down from Intel, down from ARK. So it's pretty much all those positions that have hurt us. Everything else is technically, in the grand scheme of things, positive from the automation perspective. So got to keep that. I mean, I guess we're barely down on Bitcoin. So I guess that's good. And that kind of, again, goes to talking to the benefit of automation, just consistency in general. The only reason I keep talking about automation, not just because we obviously have the platform, but created originally for myself personally. Zach and I built it. And it does it when you don't think you should do it, maybe. And it just is going off the statistics. And that's how you get ahead and kind of benefit, because when I'm watching, even I'm susceptible to emotions and emotional trading. So trying to remove that is kind of the key to long-term success, in my opinion. We've had some users where they turn off automations, and again, anyone can do whatever they would like. Obviously, I was even explaining to my girlfriend, and it's tough to try and say, hey, because this was literally such a crazy time. It's like one of 3 times that the market has moved this much. And of course it's happening, right now, right? But it does get tough to keep things going when you should. It's the analogy I would maybe give is maybe a poker analogy. So let's say, you go through a bunch of volatility or drawdown, and then like you have pocket aces, which is when VIX is very high. You can kind of keep selling into this because usually profitability goes up and success goes up when the VIX is higher. You're selling higher volatility. So you have pocket aces, but then you choose to fold them instead. And so the tough thing is to be able to go through the drawdown and then keep it going, even though you don't think so. So some people missed out on some of the rebound. Luckily, I kept my girlfriend also going, and other people have theirs still going, and they're basically coming back. But if you did sit it out, it's kind of like missing the best days of the market, right? If you've ever seen those graphs of, if people miss out on 10 of the best days of the market, which is, going against kind of timing the market, you have a significantly lower average annual return. It's like a crazy amount. It goes from like an average of Again, I'm just ballparking here. It goes average of like 10% a year, and then it drops like 2% a year if you miss out, of the 10 best days of the year or something like that. I'd have to pull it up. Maybe I'll go over that type of stuff in another video. But you just kind of, it sucks now when this stuff is happening, but then you just got to understand that eventually this does need to calm down. And as long as you can kind of consistently be selling stuff along the way, and just keep it going automatically, you should be able to benefit. And I think I showed at one point, when I did one of the custom ES positions, it's like I was getting double the credit that I got even 2 days later, because volatility was so high, and then it came down, which we then closed and then did another one. But that's just one of those scenarios where it's like, that's why it technically is in your favor to do it when volatility is high, because you're getting the increase in premium and you're getting the increase in return for taking that similar risk, versus here you're getting lower premium, but theoretically there's less risk. So you just got to watch these things. That's why you got to stay consistent. So I think that's pretty much it. Again, really appreciate everyone's subscriptions and comments, likes. Hopefully this is helpful, and you appreciate the kind of transparency. And we will just kind of keep this going. I'm going to get back onto doing some other kind of topics for the channel as well. So stay tuned, and we'll talk to you on the next one. Take care.